After abandoning ESG from its thesis, BlackRock conquered a record in her assets. Welcome to the channel. My name is Lena Sakai. I'm Green Business Post editor. And today you will see if ESG has something to do with BlackRock's record this year in her results. If this is the kind of content you're looking for, like and subscribe to the channel to receive new content on ESG management. So follow me, the conscious ones. Let's understand if this relation is coherent. I'm going to quickly explain BlackRock's journey with ESG because I already done videos about it, and I will leave here in the description so you can understand the context of its results. So in 2020, BlackRock was responsible to empower the world with ESG issues. BlackRock is the largest investment assets in the world. So it has a large quantity of investors, and many companies are invested by it, by BlackRock, and her power of influence is huge. That's why ESG got so important. But along the way, after ESG got important, after a while, companies started showing its results, their execution, and they were a disaster. They were incredibly negative, and that started influencing investors, governments' decisions, and a movement of people that started correlating ESG with bad results. So what happened? Governments started to boycott BlackRock. Investors boycotted, and a huge pressure on Larry Fink, BlackRock's CEO. He got so stressed that last year he said that he would not mention ESG anymore because he said that it was politicized. Then, and the way he said, we could understand that nothing was never enough. And he was tired. And after that, this year's report, this year's BlackRock's thesis, they did not mention ESG. They did not mention climate change. The main issue Larry Fink would spread the word, and it was like we everyone got like surprised. But it's not surprise because of the pressure, because of what investors wanted. And that's understandable because you invest your money, you want to receive a little more and not a little less. You don't want to lose money, you want to earn a bit or a lot. And that was not like happening. They were afraid. And that execution, that terrible execution that happened in many organizations, that reveals one of the main problems of ESG. The index and regulators, they were focused too much on compliance, on seeing if organizations are adopting ESG issues, and too less on the results, seeing if the impacts are really happening for the society and environment and for the organization. It needs to be a win-win, right? And because of that, they would not see if the execution was being done right. And we saw in the news that it was not. And that's the main reason I wrote my first book. I got so impressed and sad, and I felt I needed to do something about it, that I wrote a book on 5 cases, failure cases, on adoption of ESG. I explained what happened and what they should have done, the best practices, how to execute so that they would put ESG on this strategy really and cause positive impacts. And there is a very important observation in this. When there is no positive impact, it doesn't matter if you adopt the issue, that's greenwashing. You need to cause positive impacts for the external world, the one you want to impact, but to the interior world of the organization. So let's see the news. In Financial Times, BlackRock assets under management surged to record $11.5 trillion. It was the first time BlackRock topped $11 trillion. So you can see, what does that mean? Investors put money on BlackRock. So before, there was a movement of boycott, and now BlackRock has a record on its assets. So it means that she changed her 2024 thesis changed. It was focused more on financial resilience rather than ESG. ESG was not even mentioned on the report. And ESG is not even mentioned in the news. That's not coincidence. We can see that BlackRock focused on her traditional work, her risk analysis work, rather than seeing if organizations are adopting ESG or not. They are using statistics to see if the results are going to happen, rather than seeing if the ESG issue is being adopted with no understanding of its results. That's what was happening. That's the great critics of Vanguard, another huge investment manager. Vanguard uh, did not adopt ESG, and BlackRock started to have a bad relationship with its investors. Investors got scared of ESG results, uh, subjective issues. So what does this mean? It means that investors are putting more money on BlackRock. That's why she got a record on the assets she manages. It means that if the investors are investing more in BlackRock, BlackRock is probably mm, harvesting good results, good returns with its investments, with the change it made this year. So BlackRock changed the way she invests. She heard the investors' voice. She heard the demand. The investors, they trusted more in her thesis. And that's why now she's showing a great result. It's the trust of people. So is that a coincidence? Do you think that's a coincidence? I don't think so. In my view, it has everything to do with ESG because this year it was a surprise when BlackRock showed its report without mentioning ESG. It was a surprise, and now this result, this huge result, that's not a coincidence. What do you think? Do you think there is another issue rather than just ESG for this result? Do you have another correlation you made? Share with us so we can understand the way you're thinking. I was thinking here, and I'm going to do another video to explain better how ESG should be executed, how companies should practice ESG, how it's been put in this strategy so that the impact in social environment is positive and the impact in the organization is positive. Don't miss our next videos. If this content helped you somehow, like and share with someone that might benefit from it. And don't forget to subscribe to our newsletter because the social media not always notify everyone. This was the content of today Green Business Post Responsible Impacts for Sustainable Communities.